Hi and welcome to this Blueberry Markets video update with me, John Kibler, Head Currency Analyst. In this video I'm going to take you through the Forex market wrap. We're going to take a look at what happened in the news this week and some of our key charts that we spoke about. So going through the news, first of all, what we really saw out of the market was some strong CPI numbers out of the UK. We saw CPI rise from 5.1% to 5.4%, showing us that the inflation in the UK has been rising year on year. This was to be expected. It did give the pound a very, very short-term boost, which we'll discuss in a moment. But after that, really, we've seen a little bit of downside to the pound. You know, there's been a lot of volatility in that market this week, largely due to the fact that the UK Prime Minister Boris Johnson has come under a lot of pressure to resign this week over some controversial lockdown situations. So, pound a little bit fragile at the moment. We did discuss that in our week ahead analysis due to the strength meter showing that the pound was at an extreme, and we have started to see the pound roll over. So, the strength meter showing that sign of weakness following through. We also had some really good employment figures out of Australia. So we can see here that despite the fall in jobs from 366,000 to 65,000, we have seen unemployment fall to 4.2%. So a drop in the overall numbers, however, still a creation of 65,000 and a fall in the unemployment. So some positive data there for the Australian dollar. Moving on to some charts then. So the dollar index was an interesting one for us this week. We largely looked at the potential to see if price could continue its downward movement or whether price was going to move back to the upside. Now, looking at the price at the moment, we can see that the market didn't really find resistance at the lows that we were looking at. It actually surpassed through that move. We then dropped back down, retested the other side of the level of interest for us, and then after that we largely ranged. We knew that the pullback was more than likely due to the aggressive nature of the drop. However, price has just ranged for the rest of the week. Now, if we trade above 95.80, it could be an idea to see some further long positions at that point. But at the moment, that's all I've got for the dollar index. So let's move on. Moving on to Euro US dollar, we can see that the price has started to trend back to the downside. So with the dollar index breaking above that resistance zone, the Euro US dollar price broke below the support zone, which we were looking to see if buyers would step back into the market. And due to the dollar being or remaining fairly bullish, the market formed a new lower low here, and then used that support zone as resistance recently, with the price coming back to the downside. And again, it looks like we're seeing a little bit of resistance in Euro US dollar at the moment. So we could still see a move to the downside here after the market forms this weekly bearish candlestick. So we'll take a look at it in the week ahead analysis and see if that 4 hour can remain lower lows, lower highs, and that will give us an idea where price could be on the move to next. Looking at the pound then, so the pound's been pretty bearish all week. We talked about this previously when we highlighted the pound weakness coming into the market via the strength meter, and you can see we've started to create lower lows and lower highs. Now, CPI data came out, and we saw a fairly bullish move from the market. It was actually this candlestick in here where we started to see some buyers step back in. We also then had some US dollar unemployment claims which came in negative for the dollar, that pushed prices back into this resistance zone here, but very quickly sellers jumped on the back of that rally, and we started to see the pound US dollar price fall, and now it looks like we're creating another lower low here. So next week could be another bearish week for the pound. We could start to see that drive into that sort of 134.50 area, which we've discussed recently. So let's see what happens with this one. We could see another lower high, lower low pattern, and another opportunity for the sellers to jump in the market. Finally, then crude. So I do think that crude is going to start to turn around a little bit. We just need to be a little bit patient with this one. We haven't seen the drop in line with the stock markets, which is fairly unusual due to the fact that the S&P and the crude oil prices are usually fairly correlated. Obviously, there are other factors in line with the energy market at the moment as well, but we have sort of rejected or started to show signs of a bit of a slowdown. We can see that we've rejected the previous high, not aggressively, but it is a slight rejection. The only thing I'd be interested in is seeing this 4-hour trend develop a little bit more. We do have a double top and a new lower low. What I would really want to see is another sort of lower low, lower high pattern, just to confirm that the sellers are starting to push price down a little bit, and you see if we can actually get some active selling at this point. So one to watch definitely for next week, crude. But I hope you enjoyed the video content this week. If you did, leave the video a thumbs up, subscribe to the YouTube channel to see some more of our Forex trading content, and I hope you have a great weekend.